Hello, everybody. JD here with your Rational Trader Market Analysis Daily. In today's video, we've got more earnings, mean reversion, cash machine, generator plays. Last week, really hit a lot of great trades. We'll look to do that again this week. We did have that big loser last week with Charter Communication. Kind of an unusual circumstance there. But there's lessons to be learned from that losing trade as well. But let's get started on the right foot this week. Two really interesting trades to make. They're more of the exotic variety here, similar to what we did with Tesla, starting with UnitedHealthcare. This hot button healthcare company under investigation for fraud, I might add. Is that a company that's going to move after earnings? I think it is. So we're going to look at doing a debit spread on the long and the short side. We're going to buy a call. We're going to buy a put right at the money, the 280s. Right now, 280 calls at $12.15. Again, these were prices taken within the last hour. So make sure you use your own pricing. Cut to the chase. We're going to do a 280 call, a 280 put. We're going to write we're going to buy those calls at 280 and buy the puts at 280. We're going to write a 290 call and we're going to write a 270 put. So we've got a $10 spread there. The cost should be right around $9.10. When all is said and done, that leaves 90 cents on the table. If we get a 3.5% move on UnitedHealthcare, we're going to have full profit potential on this debit spread of $10 on UnitedHealthcare. Next up is Spotify, and Spotify options are outrageously priced right now. You are looking at a huge premium that makes itself amenable to doing a credit spread. Now, I'm not going to do a naked call on Spotify, but and if you did, you'd be taking a pretty max risk. You know, if the stock jumps significantly above this $700 current market price. So uh, what I did was I looked at an 830, 860 call spread on Spotify that will mitigate your risk, but allow you to collect a credit of just about 50 cents. So if you uh, write the 830 call, I can look at that real quick for you here. Let me check my Charles Schwab pricing on Spotify. And the 830s right now, yeah, you can sell those for about 96 cents. You can buy a an 850 call. Again, that caps your risk at the spread between 830 and 850, which is um, $20, right? So actually, I'm sorry, I think I did say 860. So let's do the 860 to buy that. You would pay 44 cents. So that's a better profit potential. Now, to get to just the 830, Spotify would have to move 18.75%, rounded up to 19%. Is Spotify going to move 19% higher after its earnings report? Highly, highly unlikely. It would be a very, very unusual event. To mitigate my risk, though, to $30, I'm going to buy an 860 call that I can buy back, or I can buy for 44 cents a contract. So you put 96 cents in your pocket on the 830s, you give back 44 cents. That's just about, what is that, 52 cents of credit on that Spotify credit spread. So two extremes here. United Healthcare, a debit spread needing a greater than 3.5% move up or down, and Spotify needing more than 19.5% to give back any of that 50% or 50 cent, 52-cent credit. So two really great ways to do mean reversion cash machine trades on earnings tonight yet before the close. And those companies report earnings tomorrow before the market opens. That's all I have for today, folks. This is JD. I'll be back tomorrow with another video. Take care, everybody. By the way, if you're enjoying these cash machine mean reversion trades, um, give me a thumbs up in Telegram. If you don't like them, give me a thumbs down. That's okay. You can do that too. And if you want more of this stuff, give me a fire emoji. Thumbs up, thumbs down, or a fire. Tell me what you're thinking on these cash machine mean reversion trades. I'll be back tomorrow. Like I said, this is JD. Take care, everybody, and we'll see you next time.